Executive management requires the most advanced and latest metrics to both monitor and manage the revenues, the cost potentials, the risks, in particular the sentiment that's in their customer base right now. Customer advocacy represents the very latest in these metrics, from customer satisfaction in the 1980s, customer loyalty in the early 90s, customer engagement in the late 90s, and then Net Promoter Score in the year 2000. Customer advocacy is the latest and most recent metric in that long line. And it does a great job in terms of being able to predict those behaviors that most executives want as a goal from each individual customer. And those goals would be increased referrals to friends and family of those customers, increased cross-sell and repurchase from each customer, and finally the retention of that customer and their business. Customer advocacy does a great job and allows executive management to manage their particular organization to achieve those goals. I'd have to say that the phrase, "the world has changed," used to be reserved for dramatic moments, but it now summarizes the market for financial services. The world has certainly changed since the recession of 2008. And we find that banks, insurance companies, and brokerages are all now facing a completely different customer that they faced prior to that recession. I'm particularly excited about customer advocacy because it was developed in just the last 2 to 3 months. And it was developed in markets such as North America, the UK, Southeast Pacific, and we feel it does a very good job of identifying and correlating with those goal behaviors that executives need to build, which is customer referral, customer repurchase, and customer retention. That's why I'm so excited about this metric, and I think it'll do well for any company that truly adopts it at this particular point in time, knowing that it's fairly new to the market, but yet it has been tried and developed in the market, and so it does actually have a track record. I stand by it. Segmentation simply allows executive management to identify the top 20 to 30% of their customer base in terms of having the most potential revenue. Customer advocacy does a great job of that since it correlates so highly with repurchase, cross-sell, and customer retention. Customer advocacy would first identify the most lucrative segment, which are called the advocates. And once we've identified that, we can profile them and understand that we need to attract more of them through our marketing strategy. The second thing that we'd want to do is we'd want to identify those customers that are a little bit less in terms of customer advocacy. And what are the messages, the themes, and the operational changes we need to make to get them to raise their advocacy level and actually begin to give positive testimony about their particular company. The third thing we want to do is we want to identify what is driving those customers at the very lowest levels of customer advocacy. What can we do to fix to raise them out of that low level? And what do we need to do to prevent those customers that are above them from drifting into those particular levels? Once we've done that, we've got a fairly straightforward strategy to really improve the levels of customer advocacy, which then lead to revenue growth for any particular company.